first company is called It's called Catalyst Pharmaceuticals. The ticker symbol is CPRX. CPRX. Catalyst Pharmaceuticals. It's a biopharmaceutical company based in Florida, developing therapeutics for rare neurological diseases, phosphate salts. Oh, I know, Paul, you love your phosphate salts. The company looks fairly interesting, Paul. Do you want to pull it up there on the beautiful Everything Money software, which will be available?
So guys, remember Everything Money software, patreon.com/everythingmoney if you want access to it. But there's also so much more you'll get with it, such as access to Mo and I, depending on what level you pick. And currently it's $17. It was $8 just 2 months ago. Now the lowest level is $17. It's on its way up to $49 at some point. We have over 1,500 members who've signed up. Our goal this year was to end the year at 700 members. We now have 15, and it's only March 16th. We're up 50% since the end of February. Trust me when I say, value investing, join the Patreon. You will not regret it. Okay, so I've added a few things to the website. We've changed it up a little bit, which I love. Market cap, this is a small company, Sethy. $380 million.
What's the market cap for this?
$380 million.
Thanks. CPRX.
Okay. PE of only 5.3. That's a check mark there.
Nice.
Wow. Profit margin of 60%. Another check mark there.
Double checks already, huh?
Why do we have? Wow, this is pretty interesting. Okay. So guys, I've changed a few things here. I'm looking at, I've changed a few things here to make it easy for you. The last 12 months, they had $44 million in free cash flow. The average 5 years, though, was $847,000 a year in free cash flow. So they must have had big losses along the way. So that's going to be no dividend, return on assets high, return on equity high. This return on invested capital is something I think I'm going to be removing the profit margin pillar and replacing it with return on invested capital. And the reason being is return on invested capital, and by the way, 2.4% is very low, but this is an average over the last 5 years income. Return on invested capital, a lot of value investors believe this is long run what a company should do. What that means is, how do they generate profit on the money they invested in their business? So it takes you can invest money in a business two ways, either borrowing money, which is debt, or putting money in yourself, which is equity. So it takes those combined areas and takes the profits that's been generated over the last 5 years divided by the most recent, basically total amount of money invested in the business. And it gives you this 2.4%. Now, on the 5-year basis, if it's a company like this, it's probably grown a lot. They probably had a lot of losses along the way. So it might be skewed. But the point is, it's something to look at. And we'll take a look. So far, Seth, we have 2 check marks on our current pillars right now.
Yeah, a couple folks are saying that this Catalyst Pharmaceuticals, it might be a magic formula stock. So there might be good things in store here, Paul. And if you're watching this if you're not watching us live, this is obviously a live stream, so we're taking requests. So we've done zero research on this company in terms of due diligence. We have no clue someone requested this, but this is our 500-foot view screener of can we go forward and maybe look deeper on this company, Catalyst Pharmaceuticals. So Paul, pillar number 3 is revenue growth over the past 5 years.
So the revenue growth, this is weird. I got to make sure we have all the data here because I don't want the haters to, because I'm not showing any revenue.
Go ahead, Paul.
It looks like that on white charts.
Oh.
It is like that on the white charts?
Yeah.
So guys, this is probably a big issue we have. There's no revenue for many, many years. But they had revenue 19 and 20 of 72 and 118 million. So check mark for whatever reason.
It's saying the same thing on Wikipedia that there's no revenue as of 2018. So
beautiful. Profit, negative 18 million to a positive 71 million. Check mark there.
So it's going up. Okay.
I mean, I like this so far.
Okay. Pillar number 5 is shares outstanding. We want the number of shares going down, hopefully, Paul.
It is not, which is not a shock to me. 83 million to 103 million. That's an X. Usually smaller companies that are growing are going to issue a lot of shares in order to grow, to raise money, because they'd rather do that than bring on debt and kind of hold the company down. So I am kind of surprised, though, with how cheap the stock is relative to its, from a PE standpoint. But either way, no big deal.
Pillar number 6 is current assets.
I'm going to bet a lot of money that there's more cash on hand than total debt.
This is current assets over current liabilities. This is pillar number 6. Go ahead, baby cakes.
143 million? Oh, my lordy.
Give it to me.
Good Lord. Total current liabilities of 18 million, total debt of 18 million. So guys, what this means is they have $143 million in cash. The total debt of the company is 18 million, not even current debt, total debt. That means 125. If you bought this company tomorrow and paid off all its debts, you'd keep $125 million if you shut down the company. Which means the current market cap is how much?
Well, in front of me on Google, it says 425.
Oh, it must not be updated for us.
Yeah.
So minus 125, you're basically buying this company for $300 million today.
Oh, holy cow, look at that. So it comes right off the bottom line, the market cap
Right off
there.
the bottom line. So this is the be all and end all. And this tends to be in startups, technology businesses that are very young. They tend to have more cash on hand than total debt because they try to raise money through equity.
Yeah, guys, feel free to, guys and gals, if you're in the chat, feel free to fill us in. Joseph is saying they may have a weak pipeline of drugs coming out. Who knows? Pillar number 7, Paul? Pillar number 7. That's a check for 6. Pillar number 7 is free cash flow growth, my friend.
Okay, so right now, guys, free cash flow. And again, because of the 8 Pillars website, I actually added a line to the investing section for free cash flow. And I'll be over here. I'm going to put an average in here at some point. Hey, what's your name over there?
Hey.
Mo. Can you write me an email and just say, Paul, remind the developers to put the average 5 years.
Oh, that's a great idea,
on
Paul.
here.
Then we don't have to have me do this and mess it up.
Well, it's already calculated even on the main page.
Okay, keep going.
So right here, we have an average of $875,000. It's $18 million loss, $14 million loss, 22 loss, 13.8 gain, 44.2 check mark. Now here's the deal, guys. I'm not worried about these first 3 years because they were losing money all along the way. They had no revenue. I don't give an F. So really, I'm going to look at the last 2 years. That's $28 million average. This is 10 times free cash flow.
Wow. 10 times.
Because you have $300 million after paying off the debt, divided by 28 equals 10.8. I don't know, something like that. So, guys, this is a small company. What do they do exactly?
They do neurological drugs.
So why are they all of a sudden
I don't know.
selling a ton of stuff?
I don't know. That's something that I would want to go further and look into because I'm just reading their description and neuro's a tough industry. But I mean, I think it might be worth going to look at it.
So guys, this is a company that, boy, I really hate to say this.
Say it, Paul, baby.
I'm not going to say it. This is a very interesting company. Whatever they did that got their revenue to skyrocket, whatever they did, whether it was, they probably partnered with somebody, didn't they, Mo?
I don't know. I haven't looked any further than the Y chart's description. I can look.
You got to figure it out because this is something that you have to sit there and understand. Because if this is part of the company's future and they're growing and they have this revenue potential for a lot of years, this could be a big company. This could be a company that really gives a good return on its money because you're going to make a 10% on your. But I usually think that smaller companies have much more. They're more likely to all of a sudden go to zero too. So if now I'm hoping that we look at it and go, oh, they signed with a bigger drug company and licensed a drug to them. Because if you look at their bottom line profit, it's a huge. Because here's the deal, Mo. Look at this. Their bottom line profit is freaking like 80%, 70%, 60%, whatever the number is. Mm-hmm. That's huge. They can't have sales costs in here. I mean, their sales costs are. Oh, they actually do have sales costs in here. But they have no other. I mean, it's weird that they have research. I mean, this is incredible, guys.
Gianni's saying, who requested this, said they only have one drug for a very rare illness, and it's they're the only company that produces it.
So this is an acquisition potential?
Tell us about it.
Well, I mean, if you think about it, like a big drug company might sit there and say, hey, understand what the disease is, understand what the drug is.
Oh.
If they're the only ones that have the drug that would treat a specific disease that has a big market, you're going to see Pfizer, especially as a publicly traded company, they're going to want to do some sort of like maybe a hostile takeover where they just start buying up shares, or not a hostile takeover. Is that what it is? I don't know, but they're going to buy a lot of the shares and make a proxy to try to buy all the shares of the company from all the investors. So it might be the potential.
Mo, do you want to look at this or no?
Yeah, I mean, I would. So what their disease that they go after is Lambert-Eaton syndrome, and it has something to do. I can't really remember this from school, but it has something to do with where there's something wrong in the neuromuscular junctions, and this is going to probably make that connection. But I want to see the prevalence of Lambert-Eaton syndrome and who's taking. I mean, how popular is this? It's not a rare disease, but you want to do the technicals of it?
Sure, go ahead, Mo.
Okay, so we have another 50%er, and you guys, we're going to see this. It's so common in today's market. Here's your high, here's your low, and here's this resistance line. So we're going back into that resistance line. The thing that I want to show you, and this might be something that we look at depending on what kind of drugs they're using in the future. I can't really zoom in on this anymore for right now, but if we get this red line pushing up through that yellow line like that, then you can, this is something that I'm going to throw a tracker share on, put 1 share on it, buy it for $4.11. Worst case scenario, the company goes to 0 and you lose $4.11. But what I want to see is this red line pop up through the yellow. We get some green engulfing candlesticks going like this, and you start making money on it. But right now, the only thing I would do is put a tracker share on it. 1 share, keep a watch on it.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.